I'm Natalie Petty, and I'm the counseling director.
Carrie Evel, CBHA director.
Phyllis Doherty, I'm a psychiatric nurse practitioner.
And Linda Eaton, executive director. So 2 of us are actually salaried in the room. There's only 3 people who are 1099 people in the room, but a lot of other people will be looking at this video to get the information from it.
And I'm Matt Westerman. I'm a board-certified labor and employment attorney and a member of the board of directors.
I'm Carol Mediette-Bacci. I'm licensed CPA in the state of Florida, although I'll caveat that with I mainly do corporate finance and strategy. I work for Aetna. So I'm not a tax advisor, but I do speak the language and I have done the research, so I'm pretty comfortable with what we're going to be talking about today. But that's my background, and I'm also on board. Mainly, that's what I yeah. Okay. So, I'll jump right in, Linda. I know last year you did a session with everybody, and I looked at that and I pulled some information from it based on the session that you did. I don't remember the gentleman's name.
Randy Drake.
Randy, who is also a CPA and a tax advisor. So I pulled some information from that. I also researched, through the state's websites with the IRS and the Journal of Accountancy and a bunch of different other reliable sources. And there are a couple of things I want to cover, and I'll rely on Matt for some stuff too, since it's very related to what we're talking about. But I'll go over options for how you can organize your business, what the differences are between them, and then we'll talk a little bit about the steps you have to take to actually do that. But before we jump into that, I wanted to just take a random poll for everybody in the room. So how many of you do your own taxes?
I don't normally do them, but I procrastinated so long that I could no longer send them to my accountant. So I did them this year.
So you were on the list.
Yeah. The reason I'm asking is that as you're thinking about how you want to organize your business, when you go to do your taxes this year for 2013, I would just recommend talking to your tax advisor about the decisions that you've made, the steps that you've taken, and just make sure you've done everything that you need to do, because there is a checklist of steps that you'll need to take, depending on which option you choose. For those who do their own taxes and don't have a tax advisor who they normally go to, the IRS does have a small business and self-employed tax center. It's actually pretty helpful. It's on their website. It has some really helpful information about filings, different rules about how things should be considered, timing of filings, but they also have an 800 number that is free to access as well. So that's always there as an option if you don't have a tax advisor.
And I'd actually recommend, maybe at least for the first year, getting that advice.
I would. That's what I was just going to say.
Because then you can get your processes in place.
It's money well spent.
You have an idea of what documentation you're going to need for future reference, and then it becomes automated.
Yeah.
You can make that decision whether to have somebody do the taxes in future years. But the first year, I think makes sense.
So many of the things that you have to do are one-time things when you set up. After that, there are annual reports that have to be produced, but that's really, as a part owner of an LLC, I know they're not that difficult. So the annual stuff is easy. It's all the front-end things that you have to do that are one-time only that it really would help to have somebody kind of helping you through that process. I agree. It's a good investment. So there are a few options that I'll talk about, and feel free to jump in anytime if you have any questions. All 3 options are pass-through entities. So what that means is the profit from the business you set up passes through directly to your individual or married filing, however you file a tax return, to your 1040. The first is the easiest to actually set up, but maybe not necessarily one that I would recommend for you guys. It's sole proprietorship. You don't have to do articles of incorporation. You may have to, and this is what I was asking you before we got started, potentially file with the state the name of your business. But there's very little paperwork associated with the sole proprietorship, and basically you record your income and your expenses, and your profit is what you pay taxes on at the end of the year through your 1040. In addition to that, you have to pay the self-employment tax, which is the employer and employee portion of the Social Security and Medicare taxes, and I think it's 15.3 in 2013 percent. So basically, that's the easiest business to set up. The second option is a limited liability company, which is a state designation in Florida. It's basically an organization that gives you the rights and privileges of corporations, so it protects your personal assets, but it really behaves more like a sole proprietorship. So it kind of gives you the best of both of those setups. It's also a pass-through, so the profit flows through your 1040. And there aren't any separate tax forms other than a separate schedule that you have to do for your 1040 filing for that. The third option is an S Corp, which is an IRS designated corporation that does also require registration with the state. And that, just like the other two, is a pass-through too. The difference with an S Corp is that you can potentially avoid some of the Social Security taxes depending on how you set it up. So the IRS requires that if you have an S Corp, you have to draw what they call a reasonable salary. And that salary is subject to the self-employment tax, so it's subject to the 15.3%. Any profit that is not part of the reasonable salary is not subject to the self-employment tax. So depending on how you calculate your reasonable salary, you could potentially avoid paying some of the Social Security taxes. The IRS is not, they don't have a formula really to calculate a reasonable salary, but they do provide some guidelines on their website. And one, generally speaking, 0 is not reasonable, so you can avoid it entirely. And generally speaking,
Even though it feels like we're working for free a lot.
And generally anything that would give you something below minimum wage is not considered reasonable. I know when Randy came last year, he specifically mentioned that something around 50% was generally considered reasonable. So an example of that would be if your company's profit is $40,000 after you take out your expenses, if you had a reasonable salary of 50% or $20,000, you would pay Social Security taxes on the $20,000, but not on the remaining $20,000. Whereas if you are set up as an LLC or sole proprietorship, the self-employment tax is on the whole 40. So, depending on how you set it up.
And I think the IRS also looks at the industry too.
They do. Because they don't have specific guidelines, it's you want to make sure that the way you calculate your reasonable salary is sound and that it makes sense for the way that you set up your business and what you're doing and the services that you're providing to the S Corp, because it is very subjective. I will say that if they're sort of picking who it is they're going to audit, they're going to go for the big dollar, business entities where, let's say you're CPA and you have a firm and, you're collecting a salary of $10,000 a year in that firm. Well, the IRS is going to look at that and they're going to know that that's not reasonable, and you could potentially be audited. So you want to make sure that you work with your tax advisor and figure out what a reasonable salary is for you.
So if you say, okay, if I go get a job at a mental health center and they're going to pay me $40,000 a year, and I work part-time here, not full-time, so I'm going, okay, I work about 20 hours a week versus 40 hours a week, so then to me reasonable would be about half what I would get at the mental health center. So it would have sound logic. If anybody questioned it, would that be what you mean by having to make some form of logical sense?
Yeah,
I would think so.
that sounds reasonable.
But unfortunately, this is one of those that's in the proverbial gray area.
Right.
Of course.
So it's
very
not
gray.
someone where your tax advisor will say, if you set your salary at X, you're not going to have a problem. It will be one that will say, we recommend this range, but it's up to you to decide it, and
Right.
we don't know what the IRS is going to do. is. But I can tell you, it is a function of the revenue that the business generates versus the salary. Unfortunately, we had a client that was audited on that issue. There are physicians that own a service and they're taking a ridiculously low $50,000 a year salary, treating the rest of it as distributions. And the IRS didn't agree with them that was a reasonable salary for somebody who, at the end of the day, was making about $300,000 to $400,000 a year.
Right.
So if you're the only employee, where does the rest of the money go? You give yourself a salary and then...
And then the rest is what's a distribution. So you still have to pay income tax on that distribution, but you don't have to pay self-employment tax. So there were two forms of taxes, right? There's the income tax that you pay through your 1040, but there's also a self-employment tax, which is 15.3% on the first 110-ish this year. So that's an additional tax on top of income tax. So you could avoid a portion of that 15.3% based on whatever you set your reasonable salary at, but you still have to pay it.
But you don't pay income tax on the portion that's considered salary, right?
Yes.
That's considered an expense of your business.
No, you pay it on because the business profit flows through to your 1040.
You pay it for your own income tax, but the business is, you can
That's
write it
right.
as an expense.
Right, you're not
Right.
double taxed.
Right.
You're not double taxed, right? So it would be, your profit would be reduced by the amount of salary that you're paying yourself,
Right.
but it would all flow through in the form of income to your 1040. It's really a difference of the Social Security tax and self-employment tax.
Yeah,
Yeah,
that's it.
yes, that's it. Yeah.
So essentially, you're paying Social Security
Yes.
out of that?
Yes, for the salary,
For the salary.
but not for the distribution piece. All of it is subject to. So steps that you need to take to set it up, and I'll reference my notes here just to make sure I'm not forgetting anything. Regardless of which avenue you decide to choose, you're going to have to apply for an employer identification number through the IRS. You can do it online. It's free. And you can also do it by phone, fax, or mail if you choose to, so you can print out the forms. But if you do it online, you can get a number back instantly. And that just gives you an ID number similar to a Social Security number for an individual that you use on all of your taxes, on your bank account, all of that sort of stuff. And also, regardless of which avenue you choose, I would set up a separate bank account for your business. You just want to make sure that everything is separate from your personal. So you don't want to be paying your car payment out of the business account, and you don't want to be paying business expenses necessarily out of the personal. You want to keep them as separate as possible, so that at the end of the year, when it's time to do your taxes, it's very clear what expenses and what revenue belong where. It's just much easier. Yeah.
Now, if you're taking home office, obviously you're only taking that per part, so
That's
that's
right.
like, I can say, okay, 10% I'm paying out of this account, and the rest I'm paying out of this one for my electric bill.
For your deductions, like for home office, those at the end of the year would be your business expenses. So let's say you brought in 40 in revenue for the services that you're providing. Any expenses that you have to incur to earn that revenue would be taken out as business expenses to get to your profit. So your business expenses can include your mileage. So you
Right.
want to keep your mileage log, include home office if you do a home office space dedicated for business.
But like you said, try to pay that out of the other account, but how would you pay it out of the other account when, like, I mean, obviously I drive somewhere other than my work things, and
Right.
obviously I only use part of my house.
Right, well, for home office, it would depend on, how much you use. So when you're doing your taxes at the end of the year, if you have a separate area that you use, that would be calculated. So
Right.
like your mortgage payment will come out of your personal account, but part for your home office would be deductible and your business
Okay,
expenses.
so it's
Yeah.
okay that it's not coming out of that account?
Absolutely, yep.
It doesn't work.
Yep, absolutely.
So it's more just like when I go to Staples and.
Right, so if you go to buy office supplies that you're gonna use in your office, I'd use the business account. It's just linear. And say if you're having a meal out and you have a debit card with your business account, it's easier to use it, if it's a business meal, to use your card for that. And as far as mileage is concerned, for the IRS, you're gonna know, for your taxes at the end of the year, you're gonna know what your mileage was at the beginning and what was at the end. And if you've recorded the mileage for business, then the personal is just the plug. It's just the difference between them.
Does anyone have a really good thing to use to track your mileage for write-offs.
And
Yeah.
this is like a log.
You just, like, every time you get in a car, you just,
Mhm.
because I know I was watching the video that Randy did, and he said there are like devices
I saw
or
that too.
software,
I
and
didn't
I'm like,
realize
I
that, but
don't.
it makes
There's
sense.
gotta be an app.
Yeah.
There's got to be an app for
Yeah.
that. That
I'm
you can
sure
turn on
there's an app for
GPS and be
that.
like, this is
Yeah.
a business trip, and it'll just log the whole
Right.
thing.
And what about, if you do the same amount for the whole year, if you log it for, say, a quarter, and,
Mhm.
I'm pretty much every quarter, I'm driving approximately the same.
If you have recurring clients,
Mhm.
yeah, then that makes, as long as you have some type of log or evidence of what you've done, then, yeah, that's fine. It doesn't have to be perfect.
I still feel a little bit confused about the two accounts, and then you pay yourself a salary, and then a portion of it is tax that's left in there. But then, where does the rest of that money go? Just you have to leave it sitting there and
No,
only use it?
it's still given to you, but it's given to you as a distribution,
Okay.
not a salary.
Oh, okay.
Yeah. So
Okay.
you'd still pay yourself, but it wouldn't be a salary. It would be a
Okay.
distribution,
Okay.
which is where you get into the differences of the social security.
And do you have to in some way do it weirdly differently? I mean, if they're separate accounts and I have both of them, but if I go online, of course, they're one right on after the other on the
Right.
bank. So, can I just still transfer and go, okay, transfer 500 from here to there?
As long as you
As
have,
long as
as
it
long
went
as
into
you,
the other account
as
first.
long as you've recorded what that transfer is for. So, as long as it's in your company records as a distribution or as a salary,
Got it.
then that should be okay. But a check is easier to track generally than a transfer.
Can you do it that you take it as a shareholder's draw, and then at the end of the quarter or whatever, you differentiate what was left, or
Yes.
is that too tricky?
Yeah,
Okay.
we can do that.
So you don't actually have to pay yourself a payroll check that you then deduct each time that the social security, you can do it quarterly or whatever.
Yeah, you still make your social security payments and your estimated tax payments quarterly. Yep. Yep.
So it doesn't look like a payroll check normally looks when you get it from a place you work, where they itemize everything.
Well, you can if you set it up where you do checks every other week to yourself as an employee of your company.
You can do that.
And I did it for a very brief moment in time, but it was too much accounting for me to do the agency and my personal.
I think that's-
I just set up a payroll, QuickBooks is all set up where you can just run payroll and it automatically figures everything and then you just write a check
Yeah.
from it.
Or you
That's
just
one.
do a transfer if your account's are linked? Can you do that?
I always write a check.
You
I mean,
could,
you
I
can.
think a check is easier to, but
I'm
yeah,
not
you can do a
thinking-
transfer.
Okay, so you
As long as you, like, if it were me, if I were doing a transfer in the note, where you can put in a little note, that I would put, shareholder distribution or salary or, yeah.
So what can you do with that extra one?
You live on it. I mean, it's the same, what you would do with it if it was salary,
Yeah,
right?
it's the same. It's just not subject to the self-employment tax. If it's a distribution.
How does that affect your social security at the, when you're 65?
Well, that's above my pay grade. Social security is based on what you paid in, right? So it would lower it if it's still available, which is available, right?
It's still there.
Yeah.
Yeah, if it's still
If it hasn't been paid
existing.
out to everybody else who's already retired, right?
It's probably a good idea to have a retirement account
Yeah.
at this point.
But technically, yeah, it wouldn't.
Nobody can afford retirement accounts anymore. We have to pay our own flood insurance, please.
So, next steps, if you, once you've set up and you have your employer identification number, the next step would be to file your articles of incorporation or organization with the state of Florida. That's if you're an LLC or an S Corp, and you can do that through sunbiz.org. The forms are online, and it's pretty easy to do. My husband and I have an LLC, we've done it, it's pretty simple. It's just basically what's the name of the company, what's the purpose of the business, all those types of questions.
And there's different. Do you have something that indicates how much it costs for each of the different types? Because I was talking to people about this and I actually got it wrong. I was thinking it was like $300 to set up an S corp, and I was wrong. It's
not.
actually a lot less than
Yeah,
that.
it's a lot less than that. So a corporation in the state of Florida is $70 to set up. So when you file your articles of incorporation, it would cost $70. If you want a certified copy of those articles from the state, which you probably want to set up your bank account. I know when we set up our business bank account, we had to provide that. I think it's $30 for a copy. of the articles of incorporation. It's a little bit more for an LLC, it's $125. And if you want a copy of your articles of organization from an LLC, again, that's $30.
You said it's the sundays.org.
Sundays.org. And they have a frequently asked questions section as well that'll kind of step you through everything that you need to do, but it's pretty straightforward.
So someone, like an average person, it would be somewhat simple or complicated?
My husband did it, and he's not at all.
You remember?
So yeah.
It's on the record, by the way.
It wasn't that I did it and Carmen's done it, that's why I had Carmen come.
My accountant did everything for me. In my opinion, this is all like Greek to me. I do not understand accounting. I do not understand the IRS, and so for me, it was way easier to just pay an accountant to do it for me.
Do they ever charge?
Huh?
Do they ever charge for that?
Oh yeah, they charge. I pay my accountant
No,
money, but-
overcharge.
Unlike us, they
Like if
don't
the
work
fee's
for free.
$70,
Yes.
how much do they
Yeah,
charge?
they pay a fee.
They charge
pay a fee on
you
top of it.
to do
Yeah.
it, yes.
I mean, do they overcharge?
I mean, I don't know.
Like,
Yeah,
they
they charge
should-
more than
you should-
$70.
Relative.
You should probably ask how much they would charge for it and then decide whether it's worth it to
I
you or not,
paid
but it's really not,
$500
it's really
to my
not that
accountant
hard.
to do everything for me at the very beginning, and he did everything.
Was it
for me.
$500?
$500 I paid, but
I
this
think a lot of
was
law
years
firms
ago.
do the same. I mean, I know our firm does the setup of the incorporation of the LLC, and it's usually a flat fee to set up the business, to register, do the articles, or to get those filed, and get the tax ID number. It's usually it's a little bit more for an LLC versus the S corp, but it's $500 or
But
less.
it's, you only have to do it once.
One time, that's one time.
And then if you want them to do your annual reports and things,
Yeah,
it's
they
a little
pay
bit more,
it.
but even that is fairly nominal.
Yeah.
annual fee.
And if you do them yourself, they're not.
They're not, you just basically say, who are your officers, and confirm
That's
that
it.
it's still in existence, you
Yep.
check boxes online, and you pay the money.
Because they're not taxable, separate legal entities, there's really no tax form. All the tax stuff flows through your personal tax return. So there's nothing financial per se to do. You just have to file with the state once a year to let them know, hey, I'm still here and I'm still doing business, and you pay a fee. So those fees are, an annual report for an LLC is about $139, $138.75, and it's $150 if you're an S corp.
But if you don't pay, they charge you $400.
That's right.
You don't make that mistake.
You don't want to not do it.
You have to do that by April each year?
Yes, yeah. And again, I mean, like Matt said at the beginning, and I would echo again, at the beginning when you're setting this stuff up, it's probably a wise investment to get somebody to help you, just to make sure you're doing, because it is, it is, if it's new, even if it's not difficult for somebody who does it every day to do, it's all new. It's new terminology, new forms, everything's new. So it's money well spent.
Can you go back to the,
Why is Delaware considered a big state to incorporate?
Well, that's a C corp as a business, which is a different kind of corporation. Their corporate tax rates are lower. So,
Doesn't apply to.
yeah.
Incorporate anywhere.
Oh, I see what you're saying. Business-
don't you have to be a resident of the state you're incorporating?
No,
really? Ah, interesting.
Foreign entity.
Oh, that actually brought up a really good question I was supposed to ask. So if we have somebody who is contracted to do work for us, who lives and works out of the state, does it make any difference where they incorporate?
Well, if they incorporate in the state that they're living in, and they're performing services in the state of Florida, they would probably need to register their incorporation to have a license to do business in the state of Florida. That'd be
I was actually going to talk to Matt after the meeting about that particular person, so
Okay.
if you want to just,
Okay.
we can just do that after.
That's the exception rather than the rule. It's probably
Yes,
not too
obviously.
bad. Okay.
It was, but she's like, can you ask us one question? Sure. Well, yeah, how often does it come up?
Once for us.
But it's
So
very
can
useful.
you go back to, at the beginning, when you were talking about the different types of corporations, you said sole proprietorship is one type, but you wouldn't necessarily recommend it. Can you explain?
Yep, and
Why
this is where
that-
I'll lean on Matt a little bit too, but For a sole proprietorship, it's you, right? So you aren't protected from liability in any way set up as a sole proprietor. With a limited liability company, and assuming it's
That's
from a
correct.
liability perspective, your personal assets are protected from creditors or debtors that your business is involved in. So, you know, if you as a business went out and borrowed $50,000 and you couldn't make the payments on that for your business, your assets are somewhat protected. But you
Are
know
our
that better than I
current
do.
people, our current 1099 people already sole proprietors, or is there something they have to register to do? Or,
You would, that's what I was asking Matt at the beginning too,
Yeah.
actually. I'm not sure.
so I
The
think they
state-
might already be sole proprietors.
Well, the state does have certain requirements to register a sole proprietorship as a fictitious name is what they call it, but it's basically a DBA. So it's you performing some work under a different name. So
Okay,
me,
so-
Carol, if I set myself up as Carol's accounting shop,
Mhm.
then I would have to file Carol's accounting shop with the state.
Okay, so no, we haven't even done that much for most
But
people.
it doesn't apply for everybody. And I would call the state if you do decide to go that route, just to make sure, because it said, an example that it gave was that if you are a licensed state professional, so if you were an attorney setting up a law practice in the state of Florida, you don't have to file the fictitious name filing with the state.
Well, and for the reason this is becoming a requirement here is for the whole workers' comp exemption thing. And I don't think, in our research, I don't think a sole proprietor, we would be able to get the same exemption certificate from the state of Florida that we could if it's an S corp or an LLC, but Matt could answer that better than I could.
I don't know the specific answer to that. Well, I'll find that.
I don't think so. I think that we
Okay.
ran into problems with sole proprietors for that
But
stuff.
there's other reasons why I wouldn't recommend sole proprietorship, and it's really, there's a concept in Florida law, and I think it's the same in most states, that there's a corporate veil that protects your personal assets from liabilities of your company. Now, there's exceptions to that, but if you're sole proprietorship, as she said, it's you. So if you go out and you're working and performing services for your business and you get into an automobile accident, well, that's on you personally. And that could, they can't take your home because it's homestead, but if you have other assets or you have other properties and things that are liability of your business, they could get a lien or try to collect against your personal things. The corporation, an S corp or an LLC, they have this corporate veil, which is a protection to personal liability, and it's very important, to run your business separately from your personal effects, because when you commingle, there's a concept in the law that your business is just an alter ego of yourself, and when they see that, it's there's a possibility of piercing that corporate veil. So, the example, if you have a loan that's solely in the name of your business, which nowadays is probably difficult, you have to probably sign on personally, but use that for the example. If you have this loan in the name of the business and you default, or the business defaults on that loan, well, the bank or whoever is holding the note is going to try to collect, for the amount that is owed. Well, if it's just the business assets would be, if you have accounts receivable, that would be an area that they could collect. If you have business property that is owned solely by the business, they could collect that. But it wouldn't be able to go beyond that if you truly treat your corporation separately from your personal assets. But I can tell you, if you say you have a $50,000 loan that your business defaults on, the bank's going to try to go after your personal assets, and the way that they would do that is show it's an alter ego, that there's commingling of the assets. Maybe you just run it as a sham, and there's no line differentiating between. I mean, if you're paying your home power bill and your cable bill from home right out of your business checking account, or say you're paying child support, I mean, out of your, I mean, I've seen things. I've been involved in cases where it's just there's no differentiation between the two, and especially if you're the plaintiff trying to collect money, you're going to try to pierce that corporate veil and go after the personal property. Because say it is a situation where you default on a loan, you go and take a job somewhere else, well, they're going to try to ignore the corporate line and try to get a garnishment against your wages. Arguably, if it was truly a corporate liability, they wouldn't be able to do that because you're separate, you're a completely separate entity from the corporation. That is one significant reason why I would recommend being a sole proprietorship. Now, there are exceptions to that. I mean, if I was, even though, certain professional liability, doesn't matter if you're providing it through your company or if you provide it individually. For instance, if I commit malpractice, they can sue my firm, but they can also sue me individually. I haven't researched the issue, but I assume a licensed
It's
professional.
different kind of liability. So
Right,
going
that-
after someone's license
Correct.
is not necessarily protected by.
But if it's, again, corporate debts, if you have corporate credit card, things like that, but everybody seems fairly responsible, and I wouldn't imagine that would be an issue. But, that's a significant issue there. It's the liability and avoidance of liabilities that are owed to the business.
So the liability insurance we carry now, would that switch over to cover our business, or that would stay in ourselves?
I would recommend, typically you have multiple
You're gonna
insurance
have
parties.
to change your liability insurance because, when you apply for liability insurance, it usually asks, like, where you're at with your
Okay.
employment, so you'll just.
But you always have to name an individual when you do it as a corporation, so you'll automatically be covered under the company. Yeah.
Okay.
Which of the between the corporation and the LLC can both types have multiple employees or people
Yes.
doing a partnership?
Yes.
And I think that probably would only apply to our psychiatric practitioners, but I just want to make sure if people did want to do multiple people under one umbrella, they could
Yes.
do that.
Yeah, you can have multiple employees or partners. Yep. Now, one other thing to talk about on the front end for either an LLC or an S corp, within the 15th day of the third month after you start your business, so if you started on 1/1 by crazy, by April 15th, you would need to file with the IRS one of two different forms. Form 8832 is what you would file, and I can type all this up.
That would be great.
Is what you would file for an LLC, and basically what that is you let the IRS know, I started my own business, it's going to be treated as a partnership, or there are a couple of different options, but treated as a partnership, so that they know when they get, all of the documents for your filings, so that it flows through your 1040. So you just kind of have to let them know that you set up the business, and this is how it's going to be treated. Now, if you do an S corp, you have to file a different form, but it's basically the same type of information. It's form 2553, and that's due at the same time. And it's basically letting the IRS know I've set up an S corp, and this is how I'm going to be, reporting my income going forward. And it's a one-time thing, but it has to be done at the beginning. And if you don't do it at the beginning, then you could have issues in terms of how the IRS is treating your taxes.
You said within 15 days.
The 15th day of the third month following here. So if you start on January 1st, yeah. If you start on January 1st, you want to have it done by April 15th.
Okay.
Yeah. So 3.5 months basically from the time you start up. Now, an exception to that is if you are toward the end of the tax year when you start up. I don't think that applies to anybody here. It's going to be 1/1, right?
Pretty much. The requirement is going to go into effect at the end of the calendar year, and that way it's a clean break.
Yeah, it's easier. Yeah. So those have to be filed one time only. They're free to file. You can also do that online with the IRS. The forms are available. You can just submit it online. But again, if you hire somebody to kind of help you through all of this stuff, they would do that too.
This is a good time of year to hire an accountant
Yeah.
because they just got out of the
Yep.
extensions and corporate taxes.
Yep. This is the downtime.
And so it's a good time to get your plan together and just get an idea of everything you have to have in place to start your business.
It seems like going to separating is cleaner line than LLC. Is that
There's not a big difference, I don't think, is there?
There's not really a big difference. The tax distinction is a little bit different with the IRS. The IRS doesn't recognize an LLC. That's a state of Florida thing. They recognize you as a partnership, so they look at it a little bit differently. But it doesn't affect the amount of tax you pay, income tax you pay. The self-employment tax that we talked about is the biggest difference between the two. But as far as distinction between you, the person, and you, the entity,
So paying taxes and incorporating is more beneficial.
Only from the standpoint of the self-employment tax that you may save, depending on how you set up your reasonable salary through an S corp. That's the only potential tax savings. Other than that, it's income taxes can be exactly the same. It all flows through your personal, so there's no, the IRS doesn't require you as the owner of that company to file a separate tax return for that company. It's just your personal taxes. I think the schedule you have to do for an S corp may be a little bit more complicated or lengthy than the schedule you do for an LLC, but it all flows through your company.
Do you have information about the potential, other than that, than what you've already talked about, potential benefits financially to setting up a corporation? That's why I asked.
Other than the
Carmen to count
liability
it.
and the self-employment tax,
So,
Well, it doesn't sound like it would make, I mean, from what you're saying, it doesn't sound like it would make that much of a difference to be just a contracted employee getting paid a salary and paying self-employment, or being an S corp and not having to pay that 15% on the portion that you don't claim as salary. I mean, it doesn't sound like it's gonna make that much difference to people.
financially.
The one benefit, and I just speak from personal experience. I mean, I had my own practice for years, and the one benefit that I noticed is that certain business-related expenses can be paid by the corporation, and then that gets deducted from the income of the business. Whereas if you're an employee, because I've worked in those situations, and I incur business-related expenses that are not reimbursed by my employer, I have to deduct those from my personal 1040. And based on the rules, is that there's a sliding scale based on your income of how much you make and how much you can actually deduct. And whereas if it's a true business expense, it's most of the time it's 100% deduction from the actual revenue. Where if it's taken on your personal tax, it may not be something that you can deduct from your income. So there is a significant tax
That's
advantage
actually very
there.
good. Yep.
So anytime there's meals, travel, or entertainment costs,
Continuing education.
continuing
Yep.
licenses.
Even can't you deduct what you pay to your accountant? Can you deduct that as a business expense?
That would be a business
It's a
expense.
business expense.
And so and again, I'm not a tax specialist, so I'm just speaking from personal experience. They would, an accountant would be able to sit you down and say, all right, these are the types of things that you should pay from your business because you get those come right off, if you say you make $40,000 in a year in revenue for your business and you have $10,000 of expenses, that $10,000 comes right off the top. Whereas if you try to deduct those in your personal tax return, you may not be able to deduct 100% of that from, more likely you can't. And so that's
That is absolutely, that's true. Because you pay taxes, if you have separate entities set up, you pay taxes on the profit of that entity, which is, your revenue or your income that you bring in minus all of your business expenses. So it comes out at 100%, whereas the different deductions that you would take on your personal income tax are subject to, different ceilings, they're subject to different thresholds. So yeah, definitely it comes out at 100%. So that is it.
Right. And the other thing is, if you have, this is again personal experience, if you have a lot of unreimbursed business expenses on your personal tax return, sometimes that flags audits from the IRS because why are they incurring this amount of cost? And it just opens you up to scrutiny. And keep documentation around shouldn't be a problem. If they're legitimate, it won't be a problem. But it's the hassle of having to go through an audit if that's something that triggers. Whereas maybe your business gets audited, but it's on that. It's part of the business expense. It's not on your personal tax return, where it's more likely to flag an audit. Low revenue generating LLC. If you're not, that physician practice that is trying to pull a fast one on their taxes, more than likely you're going to fly under the radar. I guarantee that, but more than likely, it's less likely that an LLC or an S corp is going to get audited unless there's something.
When you're making party And, you know, it's not like we're making millions here.
Like
There's logic that will, you know, flag certain returns for certain things that's automated, that they regularly.
Well, and my accountant advised me not to do the home office because that is something that sometimes can flag an audit. So I don't do that at all. And I mean, I do have, I use it also for personal. So it would be, you have to designate it
has to be
as
a
only
designated,
office.
right, it has to be a designated space, and there are definite criteria, yeah.
Mhm.
And I've received that same advice from my
Yeah.
accountant, that is something that will trigger an audit
Yeah.
of the home office, because most people's home offices, the
It's
coffee
also
table.
their, yeah, exactly. Or the desk where their school papers are piled up to here. I mean, you
Right.
use it for more than just home office.
But.
Yeah, but
it-
you could clean it before anybody looked at it.
Before it was
You could have nothing but a bunch of GSMs on the shelf.
And this is something to discuss with, you know, if you seek advice about the tax planning aspect. I mean, I think legitimately, if you are performing a lot of your services at home, you can have your company reimburse you for a certain, now you have to keep track of them.
Right.
You want to talk to your accountant to see how about, you know, how much is the proper amount, what's legitimate, and what you can be able to justify. But if you are performing a lot of your services at home, paperwork, and internet, phone, power, other utilities, I mean, a certain percentage of that could be reimbursed from your LLC or S corp to you, and then again, that would be a business
I do
deduction.
that proportion of cable, I mean, not cable, internet.
Yeah.
Right.
And cell phone, because I
Right.
use those for business, but I just haven't done the home office.
Yeah, all those are, as long as you maintain, you know, clean, easy to follow records of all of those types of decisions, and follow the criteria that's outlined by the IRS, you should be fine.
How would this work, for the distribution portion work for repaying school loans? Specifically related to your
That's a
position?
CPA question.
Yeah, and my initial response, and I would ask the tax advisor, I would do a distribution to me, the person, and then me, the person, pay the loan. Because the loan is probably in your name, you, the person.
Or you had a corporate.
Yeah.
Right, the loan is probably not going to be considered a business expense,
Yeah.
but I know that you
I
can
wouldn't think so.
deduct the interest on student loans from the 1040.
You have,
As an individual or an
Yeah.
As an
LLC?
individual.
but it's probably not a business, but that's definitely a tax expert question. That's beyond my comfort zone.
So when I do my taxes right now and I deduct business meals, it only takes off half of that.
Still the same.
But if I'm paying it off that credit card, debit card now, how does that,
It's still 50%. Even
okay.
if you're incorporated separately.
Okay.
50% what? I don't know.
Of your actual.
But the business would have
Yeah.
already paid for it if you debited off your business
Right,
account.
so that's,
Yeah.
because that's confusing.
Again,
Is it,
I would recommend, you know, I know that
This is a very
I know
good
setting up the
point.
company is very easy and you can do it all yourself. I would really recommend
Yeah.
talking with somebody, because the worst thing you can do is get incorporated January 1, spend the entire year, and
Doing
then
it wrong.
March of 2015,
Right.
scrambling around trying to recreate it, because that's going to be very difficult.
Right.
I think it's better to have the plan moving forward, you know, beginning of December, middle of November, have an idea of what you need, and then do it as you go through the year. Because then, you know, and get in the habit of it, and then maybe have the accountant do the corporate personal returns the first year, and then make a judgment of whether it's something you can do or not. I don't know much about taxes.
That's right.
Yeah.
To me, I'm a mental health professional. I am not an accountant. Let them
Well,
do their job.
yeah.
I'll do mine.
I'm a CPA, I don't do my own taxes. So, I mean, we have somebody do it for us, and it's, like I said, my husband has the LLC, and so that, you know, and that's part of the reason why, but once you get into a lot of the kind of, very specific rules around some of this stuff, it's better to have somebody who does this all day, every day, help you walk through it, because I think meals are 50%. And I'm not sure how that looks on your,
Yeah,
on your profit
I
statement,
then I
right?
have
Did
to,
a meal in
I'm-
my entire career.
yeah, totally missed that.
I have not
You
ever
can,
done
you can do it, if, say for, I mean, there are very specific situations under which you could, but
Right.
if you have appointments and you don't have time to go home and eat lunch and you grab something on the way,
Those are
that,
deductible.
Yes.
I never knew. When I'm in Pasco County all day.
Yes.
Because you have to.
Yeah,
if you're,
I'm not
if
gonna
you're
pack
between-
myself a peanut butter sandwich, right?
That is very unsatisfactory.
You
It's
know,
a
yeah,
long
like tax,
day.
on the IRS, I would have said, sorry, baby, you should pack your own lunch.
Appointments and you don't have time to go home.
And I would say I would not have enough energy, no, she said lunch.
Lunchables, yeah.
No, I would say
I
I
didn't
would
know,
not
I
have
just
enough
didn't know
mental
that.
energy to be able to function.
I
for
will
the rest
start
of my
doing it,
day.
I just never knew it.
That's part of the actual business expense. Is it?
Mhm. Yeah, no, it's definitely 50 and you take it off your business. Having just done my own taxes just the other day. I'm very aware of this. And they do that
All
anyhow.
the fees that you pay, those are all part of the
That's all business
LLC business expenses.
Yep. Yep, so all taking down your profit and therefore lowering your taxable income.
And when you're 65 and you retire, how is that actually going to affect, is there a maximum amount you can pay into Social Security, after which you cannot collect any more?
Wow.
Or what? What is
There's an
the
annual maximum.
base?
For Social Security, I don't know about life. I mean, at, Social Security taxes stop after 110,000-ish, I'm not sure of the exact amount for a year, but I'm not sure about lifetime, that I don't know the answer
And what is
to. I would imagine there would be a lifetime ceiling, but there's an annual.
But I do think there's a ceiling on the amount that Social Security will ever pay you though, and I think she's going, is there a cost benefit point, and I'm sure you can Google this, that there's probably some cost benefit point where it's no longer beneficial to significantly
paying the
beneficial
Social Security.
to your Social Security to be giving them money. Because the amount that will increase your Social Security by is negligible.
I see what you're saying, just because as you
Yeah,
get closer
because-
to 65, it's not gonna earn that.
Well, not even that, but also as your income gets higher, because there is a ceiling.
Like you're saying, they're not gonna pay you, like, thousands a month.
Yeah,
They're
they're
not
They're
gonna
paying
pay
thousands,
that.
but they're not gonna pay you like 10,000.
Right.
Even if you're a regular employee, just like me, I'm a W-2 employee, any regular employee, your company will stop withholding Social Security after your gross salary goes over that limit, so, but I don't know about lifetime. I wouldn't think so, I can't imagine that would work.
And what is the distribution of the Social Security based on? A lifetime input of money, or a certain,
Yeah.
is there a,
It's
is it based
what
on
you
like
put
your
in.
max salary for 6 years, or
It's based on what you put in.
Yeah,
the
you've been paying
total?
since you were 18 or
The
whatever,
absolute
you
total
have
of that,
more
no matter how much.
Well, I do think there's somewhere formula
Okay, very good.
where it takes into account both annual and lifetime somehow. There's some thing, some mathematical thing that.
Social Security and pensions are so complicated that that's a tax advice. I don't know.
You can pay that, you can pay attention to that distribution.
You can set up, a pension account.
And is that, as that is distributed, is that taxable?
Well, when you set up a corporation, you could set up
Yeah.
some kind of retirement plan
You
through
can
the
set up a
corporation
retirement
if you
plan,
wanted
But
to.
again, there are a million rules around how that has to be set up and managed and all of that sort of thing, and that's definitely something you want to talk to a tax advisor about, because if you don't do it right, you could jeopardize, the status of that, because typically with if it's like, it's not a 401k, because that's different, but, like a normal corporation that has employees sometimes has 401k accounts, and you can contribute to those, and those are pre-taxed, so you don't get taxed on the money that you put into it, you get taxed when you take it out in retirement. But the rules are very strict around how that has to be managed and all that sort of stuff to maintain that sort of tax delay status.
There's a SEP IRA, self-employment plan or something
Yeah.
like that.
It works similar to a 401k,
Yeah.
but it's
But for
for
small business.
sole practitioners.
Yeah.
If you already had one of those, then,
An IRA.
yeah, then you could just, if you incorporated, you could work with them or have the accountant work with that
Well,
person.
a SEP IRA is different than a regular IRA that you set up as an individual, I think. And so, yeah, definitely, that's a tax advisor question. But they are different. They're different, just like a Roth IRA is different than a regular IRA. It's another kind of a.
But there are vehicles that you could defer income tax-free for distribution in the retirement age through your individual business. But again, Trump is CPA, and they usually have pretty good financial planners. Those CPAs have a financial planner that they like, and they'll give you a referral. And those usually that's who sets those plans up for.
Yeah, because you can have an IRA as an individual, you could also have a SEP IRA in your company. Each one of them has limits for how much you can contribute. So they can kind of help you figure out how much money you should put where and what's going to be the most, beneficial for you from a tax perspective. But those are very complicated, specialized areas of tax that are beyond my experience.
Well, it's nice to know that you can use that, if you want to use that distribution to do that. That's something that you want to do.
Well, potentially it could be and again, I'd ask a tax professional, but potentially it could be sort of a pre-distribution thing. So you're going to pay income tax on the distribution, right? But if you do it as a business expense before the distribution, it would be a business expense that would lower the profit, lower your distribution amount, or your taxable amount, so it would defer your taxes.
Carmen, what made you choose to incorporate yourself? Or did you?
My accountant advised it,
Okay.
and he said it because of the tax differences. He said it would make a difference for me with regard to tax, and I have felt it make a difference for me. I mean, I was never really, or for very long, was I a independent contractor. I didn't do it that way for very long. I incorporated very early on, and and I think I was saying to Linda, it depends on how. I don't understand all of it because I just leave it up to him to handle it all, but I don't pay a huge amount of taxes at the end of the year. But I don't make a ton of money. My husband doesn't make, and he does. My husband's also self-employed, and he has a corporation. He pays himself a salary and pays taxes throughout the year from that. So at the end of the year, when they flow through, it's very little that we owe. I mean, and it has, to me, I've kept more of my income, I think, than I would have being, And I don't know about the difference between LLC and I don't know if that would make a huge difference. Yeah.
On the self-employment taxes, yeah. So for an LLC, you'd still have to pay the 15.3% on everything. Well, on the profit.
Is there still that 50% self-employment tax deduction? I know there used to be, but the tax laws seem to change every year. It used to be you could deduct out half of the self-employment tax that you paid.
you did it.
You still do
I'm
that?
sure it's.
Yeah,
I'm
you
not
sure
sure
did
what
that.
every year is more for, but
It was
so-
on my form.
And how does an LLC prevent you from being sued, or someone, they can only attack the corporate?
Okay, so it depends on the type of liability, but if it's a true corporate obligation, then, I'll back up one second. Is there any way to keep both you and your company from being sued on this? No. I mean, unfortunately nowadays, anybody can file a lawsuit with the filing fees in state court is about $400, and you scribble it out on a napkin and take it to the courthouse and they'll file it as a lawsuit. So unfortunately, that's the nature of dealing with nowadays. But, for instance, if you get sued individually and your corporation for truly a corporate obligation, my experience has been generally you will be let out of that litigation fairly early in the process based on this theory of piercing the corporate veil. If they don't have, if the plaintiff doesn't have evidence that you're an alter ego or commingling funds or operating really just a sham business, for instance, you set the company up to defraud creditors, I mean, it's a pretty high standard. For the most part, you'll individually be let out of that lawsuit. Now, it's not going to be the first day, and names may still appear in that litigation, but at some point, most of the time, if you've done things correctly, you will be held responsible for the obligations of the corporation and the difference in professional liability that trumps that's on you individually. And then if any obligation that you personally guarantee, that you lease a space or you lease a car, you borrow money and personally as opposed to just the corporation, then those are things that could come after. But how do you keep people from suing you for a good job?
So really, other than.
Don't screw people over. No, that's true. I know. I mean, I'm a little cynical because I see some really ridiculous lawsuits out there. But
That's why we have professional malpractice insurance that we pay.
You're also
Well, but
counter
it
suits,
doesn't.
right?
Because it doesn't help with malpractice,
No.
really, other than the car accident example.
It's
Since
not-
most of
that's
us
why I love that.
aren't gonna be out there buying vacation homes for a
Right.
corporation.
Right.
and again, the good thing is malpractice will
Rejuvenate.
pick up the defense. That's a lot of times the biggest cost of litigation is defending yourself. And because you have malpractice insurance, and it probably makes sense to have general liability as well, because part of having, part of what you pay is if you get sued, whether it's a frivolous lawsuit or not. If it's a covered act, they have to, the insurance company has to hire someone to defend you. And instead of having to pay your, an attorney to do it out of your own pocket, $300 an hour, the insurance company takes care of it. And that's the biggest part of having liability insurance, both professionally and in general.
Would that cover, if you have personal malpractice and general liability, would that cover the LLC, or do you need separate insurance for that?
Well, I think it all goes to how you set the insurance up. Certainly, your professional liability, policy can be in the name of the corporation, but you will also be added as an
You'll be
additional
named as an insured, and I think it's
party.
required that there at least be one person named on any corporation liability insurance. So when I do mine for ARSP, I list myself automatically, and then any employees that are any employees are
I'm
listed.
listed my name though. I don't know, like when you're talking about this, I can't remember if my liability insurance has my business name on it.
Does that make a
Because it
difference?
covers me personally against malpractice, but I don't know that it covers family assessments.
I mean, I think it's a
No.
technicality. I mean, I think out of abundance of caution, I would recommend that your corporation be listed as an insured party on your policy.
And any location that you practice out of should be listed. The address should be those addresses should be listed as on the
Well,
policy.
except for the absurdity, the fact that really.
Yeah, that's insane.
I mostly directing that to Phyllis because of her, she operates out of several locations. Yes, so wherever you are in your vehicle in the client's home, that would probably just have that would probably
where
be
my body happens to be at that.
that would
moment.
probably be whatever address you list on your corporation, which I would imagine is probably going to be a PO box or something for most of you guys. Because you don't want your home address listed, because it's public information. What you put on your, when you set up a corporation, that's public information. I would not want my home address listed for clients to be able to look up.
Do you really think your clients, well, maybe your clients can't find
Maybe
you.
Lynn
Your
does.
clients can
Maybe they
totally
can find you if
find
they
you.
want to.
And they're not going to need to go to any.
I'm not going to make it any easier for them, let's put it out there.
It's not that hard.
You're right. It can't hide today.
That's not worth going to the
internet
PO
does
box
everything.
for that task, for something.
Mine's in my home address. I mean, I don't love it, but it is. But I was.
I work for the Hillsborough County Sheriff's Department, so that might not be good.
This is what I know this sounds like a broken record. Tax stuff, ask your CPA. Insurance stuff, ask your insurance agent, because they're the specialists. That's why they get a commission. So use them as a service.
You're so funny. You think there's a tax person? No. You get this thing emailed to you, and you fill out the form, and you send them money once a year.
Well, if you hire an accountant.
No, I'm talking
No,
about-
I was referring to the insurance.
Oh yeah, you can actually talk to a person. I don't have an insurance agent.
You can though. You can call up
You
the
can.
800 number and you get someone.
There is someone assigned to you, but
There is
the
somebody-
reality is most of it's done on the internet.
Right,
I don't
I
talk to a
understand
human
that
being.
reality, but there is an agent somewhere that's
Somewhere.
getting a
Yeah, they'll
commission
have a
for that
license,
policy.
they'll have a licensed person on the other end of the answer.
It's not just a bot.
Yeah.
Right. Not yet.
Eventually you'll get to a person, who's probably licensed, if they're giving, advice on what type of policies to have, but, so I can type up the general steps, the initial steps, but again, I would, I think it's a good investment up front to go to somebody who does this stuff all the time, and they can step you through the process, and you'll be sure that it's done correctly, so that, you know, at the end of well, not even the end of the tax year, the beginning of the following year, when it comes time to do your taxes, you'll know that everything's properly set up and you're not going to have any issues. It's money
We've
well
got
spent.
several other people who already have set up corporations or LLCs, and I know at least one of them has already offered it if people want to just call up and, you know, talk to her about how it's worked for her. And Carmen as well has, you know, done an incorporation for a while to be able to, you know, talk about what that process was like. So I will send that out to everyone once we're done with this, and then anyone who wasn't able to make it here has this video to watch.
Something I would suggest, though, that if you do eventually want to do it on your own, get an accountant that speaks your language, you know, that you can understand them, because my accountant is, you know, he understands it all, and I have to make him tell me 7 times together. So I just have left it in his hands. He does my husband's taxes and everything. So he just does everything. But if you want to do it yourself, you need to understand it. So you need someone who can ask questions and understand it, you know, so.
That does make sense if somebody else did it the first time. Only
Yes, absolutely.
back to my
I'll show you how to
having
do
done
it.
my taxes, I can say that I got a last year's form that the accountant did, and I went, well, if it doesn't look kind of like this, it must be wrong.
Right.
Well,
It
even
fits-
And it did look kind of like that,
It
so it
means
must
a
be
lot.
right.
to have an accountant who knows how to handle those gray areas. I wouldn't have any idea.
Yeah, if it's an S corp when you're calculating your reasonable salary, for example, you want somebody who does that stuff all the time to help you do that, because it's very gray and it's extremely subjective.
Well, and it's a lot better to figure that out at the beginning of the year versus at the end going, okay, how much should I make and how much should I, after you've been paying yourself all year,
You
something.
definitely- There's certain things you want to decide up front, and there's certain things that you have to file up front too. So you want to make sure that you've done all that. Now the forms themselves are easy to fill out. You know, all the initial forms, it's just, you know, name of the business, what do you do, what's the address. It's not complicated financial information, but there are several of them. So you want to make sure, if you don't do some of them, it's going to impact you, you know, when it comes time for taxes the next year. So I think it's money well spent to go to an expert to help you through the first year, and then the second year, if you're comfortable, you know, with doing the annual report and, you know, the taxes, then take it on second. But it's,
Well, you could probably easily do your quarterly stuff. If you want someone to still do your end of the year thing,
Yeah.
you could pay them just for that. But to
Yeah.
pay them for the quarterly stuff, it's not gonna be less.
you can do that on.
Yeah.
You guys probably, if you're 1099,
It would be nice if someone was-
So some people are LLC.
Mhm. We have at least one LLC, maybe 2, and then we have about maybe a handful of other 5 or so other people who've set up corporations.
It seems like what you said, the best way to go for tax purposes is
That's what my accountant said.
that's what I
mean,
was talking to Mandy.
I think every individual situation might vary from case to case. It might depend on how many dependents you have, whether you're married or not, whether your spouse is also self-employed or employed by someone, you know. So all those things would be something that you could figure out individually with an accountant.
You can also just try it out for a year too, see if it works out for you or not.
But the people that I've talked to, when you compare the pre and the post, you know, being just straight 1099 versus having a corporation and paying themselves through that, have said it is more beneficial doing a corporation. So I really think this is actually going to be a good thing, not another thing that's going to potentially you have to. I don't think it's going to cost more money. That's the bottom line. Should save you. I'm hoping it's going to save everyone money in the process.
Except maybe Kelly.
Except for people who are making like such a small amount of money that they'll have to decide whether it's even worth going through all the steps that it takes to do this.
Right. Well, if they're making because I only work like 10 to 15 hours a week, and it's worth it for me. So if someone who's working maybe 5 hours a week, maybe they have to think about whether or not paying the money to get incorporated and all that would be worth it. And paying the accountant for the first year at least.
Do you have someone that you already an accountant?
I do. I've gotten to the same with Mandy, gotten incorporated that. I was just going to go through them. I think they're really reasonable. They're like a ton cheaper than like these big taxes.
Yeah, if you find someone who you're involved in the process and they can show you how to do it, then you understand it, and then you can decide how, if you want to do it yourself after the initial one.
Well, and LegalZoom too has stuff that you can do online for the filings that you have to do. What they won't be able to do is help you from a tax perspective, like advise you what could be most beneficial to you given your your particular circumstance. Yeah, I would agree with that.
I'd for sure mess it up.
Yeah.
Yeah,
I would.
Yeah.
It's so important to get it right that
Right.
it's sort of,
Yeah.
Have a way to set reminders for the quarterly, because that's where I got messed up, is forgetting to do the quarterly things for the corporation. And then they give you forgiveness the first year because you're new, but then after that you can get in trouble if you don't do your quarterly report.
yeah, they generally base it on the prior year. So if you've not done quarterly the prior year and you don't do, if you kind of forget, they'll forgive.
They'll forgive you the first
But they
year.
won't the second year. Yeah, you're right.
What happens?
Penalty.
I think you got penalties, yeah. I think I only did an individual corp for like 2 years, and I'm like, I can't do this. And then I became an employee of it. So. Okay, any other questions?
That's another reason how you count, because they don't forget what they.
Yeah, I'm scared of the IRS.
The accountant knows when it's due. They do hundreds of them a month, and
They're generally, I will say the IRS is generally pretty helpful if you call them. You know, they're not out to,
I have to
They're
say,
trying to get a bad rap.
They are people.
I have dealt with the
But,
IRS a lot, and my experience has been that to date they have been really amazingly reasonable.
Yeah, they are.
Like, because I sort of never have money for my taxes, and because I always wait till the end of the year, and it's really bad. And they have been really, really, really patient and cooperative. I mean, because I always do ultimately pay them, and they sort of like getting their money. And I sort of said, well, if you just let me give you this amount, and they sort of do that. And they called me to say, and literally picked the phone and called and said, you have a mistake on here, and you really don't need to pay that much. So,
I did not have that experience.
yeah.
I did it right, and there's a mistake, and they call me from one place saying, oh, I don't know, it was very confusing and mixed up. It did get sorted.
But so yeah, I mean, I wouldn't say that they're your best friend or anything. But my experience has been that they are not remotely as unreasonable as the perception has been.
I would agree with that.
As long as you're reasonable. I mean, if it's like I didn't pay my taxes and I don't want to, if I'm not going to, and you can't make me, I think then they get unreasonable. But
You're not declaring yourself as a sovereign nation,
Right.
not
That's
subject.
right, that's right. We don't have to pay that.
no, and it's like really, if I could just deduct private school, I would be happy. That's my one complaint. I don't even want to deduct the private school cost. I want to deduct the amount that public school would be. I'm like, if I'm not using it, I should be able to deduct that part.
That makes sense.
It makes sense to me too. I don't see it that way.
But if everybody did that,
Yeah,
then
because
we
then
might
we
not
have no money for public school,
schools.
because like people like my parents who don't have kids in public school, I never did, they still have to pay.
I'm paying for public
Yes,
schools.
yes,
I know.
we all gotta pay.
I'm paying
Well,
for your
is like-
child.
This is my
My donation,
but
my
you're
gift.
not because my child's not there.
We pay for my child.
They get expelled.
Their child.
And they get expelled.
We digress. I think we're done.
Yeah, I think so.